Welcome back. It's time now to take a look at the top business stories. UAE backs Lagarde for IMF leadership position. National Bank of Kuwait sees UAE non-oil GDP grow 4% this year. And World Economic Forum on East Asia kicks off in Jakarta. Let's look at the UAE stock markets first. Both the DFM and ADX traded towards the upside today. The DFM gained 0.4% to close at 1,557 points. Arab Tech was up 1.5%. Ema Properties rose 0.7%. However, Drake & Skull International fell 0.2% and DR Development was down 1%. The stocks to lead the losers was Arab Insurance Group, which dropped 5.3% today. 67 million shares were traded, valued at 77 million dirhams. And over in the capital, the ADX gained 0.3% to close at 2,709 points. Etisalat was once more up 0.5%. Ras Al Khaimah Cement Company rose 3.5%. And National Bank of Abu Dhabi was up 1.3%. Best performer was National Bank of Al Quwain with a plus of 10%. Among the top losers, Abu Dhabi Aviation Company, which fell 3.6%, as well as Abu Dhabi Shipbuilding Company, which dropped 8.4%. 41 million shares were traded, valued at 68 million dirhams. And let's now look at the GCC equity markets. The country's main benchmarks ended mixed today. The US dollar staged a strong rally in trading last week as equity markets and the euro weakened. Reason being that markets turned their focus from a rather hawkish ECB press conference to a developing conflict between Germany and the ECB regarding a restructuring of Greek debt. And of course, markets were awoken today to a second earthquake to strike New Zealand in just 4 months. To talk about this further, we're now joined by Gaurav Kashyap, head of DGCX Trading at Alpari Middle East DMCC. Welcome.
Hi, Linda.
Now, Gaurav, tell us, what did the earthquake have an impact on the New Zealand dollar against the US dollar, and what about the growth prospect for New Zealand now?
Okay, well, as expected, Linda, immediately after the announcement of the earthquake at about 5 a.m. Dubai time, we saw the New Zealand dollar dropping across the board, and it dropped about 100 points against the US dollar, and it was currently trading around 0.8150 levels, where it's kind of stabilized. But, if looking at the larger picture, it's a very unfortunate time for the New Zealand economy. As you had mentioned, this is the second earthquake of its kind in the past 4 months. And, it really hits the New Zealand economy at a very critical juncture. Just looking at the data coming out from the last 2 to 3 weeks, the latest data shows that New Zealand is slowly crawling out of that first earthquake which had hit, and it had very improved business outlook numbers. Business activity was also on the rise. Price growth was falling in line with the Reserve Bank of New Zealand's rates. Exports were showing a very healthy trade surplus. So things were really going well for that economy, and the timing as such really pulls that type of growth back. In fact, last week, we had the Reserve Bank of New Zealand's rate decision. Although Bullard kept the rates unchanged at 2.5%, he did signal at potential future rate hikes as growth is steadily recovering. But once again, this throws all what we've seen in the past 2-3 weeks under a big question mark. And unfortunately, we see the New Zealand dollar to be under some selling pressure. We see resistance at about 83 with a move towards 80 levels more likely.
Let's turn our attention towards oil. Now, Saudi Arabia said after the OPEC meeting that more or less failed last week, they said, we're going to increase our output no matter what. Oil prices fell. What can we expect from crude this week?
That was a very, very funny story that we saw in trading last week. The first time in 20 years we've seen a situation where the OPEC cannot come to a production agreement. And as a result, as you said, Saudi Arabia had to take the road by, going against the cartel and pretty much announcing that rate output hike. And as a result, of course, crude fell, and that's why we foresee it to be under continued pressure in trading this week. We expect to see good support coming at 95 levels. We do have a very busy economic docket for this week. We have a lot of inflation data coming from some of the leading economies.
China, I think, even, isn't it?
China, not China, but we have from the US as well as the UK and the Eurozone. We'll be watching those figures. Of course, crude has a coupling effect with the U.S. equity markets. They're both tied to growth and projections. If we see one increasing, we'll see the other increasing, but we'll see a resistance coming at 103 levels.
Okay, we'll see what happens. Thanks for coming in, Gaurav.
Pleasure.
See you next week. And now to our top stories. The UAE's Minister of State for Financial Affairs, Obaid Omaid Al-Taya, confirmed that the UAE is backing French Finance Minister Christine Lagarde to head the International Monetary Fund. According to Emirates news agency WAM, the UAE's support is off the back of Lagarde's constructive role in leading the French Ministry of Finance, as well as her efforts during the G20 meetings, which tackled important issues concerning economic development, including unemployment and pay rises. Al-Taya stated that the IMF must select the right person who is able to set the right policies to solve economic problems in the world. The National Bank of Kuwait has revised its annual growth forecast for the UAE's non-oil GDP to 4%, up from previously estimated 3%. Higher than expected oil prices, the strong performance of the trade sector and fast regional growth has sparked the upward revision, according to a report conducted by the bank. It added that lower than expected inflation at an estimated rate of 2% will help the UAE be more competitive globally and support real incomes, which will in turn boost consumer-focused sectors. Also, the National Bank of Kuwait revised its growth forecast for the UAE's oil output from 5 to 7% this year. And in our fast financial news, the Malaysian Central Bank has given Abu Dhabi Commercial Bank the go-ahead to sell its 25% stake in Malaysian lender RHB Capital. ADCB plans to sell the stake to Abu Dhabi's investment fund Arbor Investments. However, others are also interested in the stake. Malaysia's top lender Maybank will make an offer by the end of the month, its chairman said. ADCB's 25% stake in RHB is worth an estimated $1.6 billion. Homebuyers from the Middle East and North Africa are among the biggest spenders on high-end property in London, with an average spend of £4 million. With that, investors from the MENA region hold a 10% share of prime central London real estate, closely followed by Indian homebuyers, which make up 9%. However, the biggest property spenders are from Eastern Europe. They spend an average of £6.2 million on London property. And after the break, we will run you through what's making the headlines in international business today.